Bing bong. I am live with another edition of the State of Bitcoin podcast. And I'd like to thank everybody listening on Fountain 2.0 apps or podcasting 2.0 apps. I apologize for those who have streamed me sats. Feel free to leave me a comment or a boost, and I will read them right before every show. But I got a very special guest in the waiting room here. I got Ben Gagnon, Chief Mining Officer of Bitfarms. Ben, how you doing today?
I'm doing good. How are you, Brandon?
I'm doing great. So, I've heard your orange pill story and how you kind of got to Bitfarms. But for those in the audience that haven't heard that before, why don't you get into that? Because I think it's a pretty crazy, pretty wild ride you had to get where you're at
Yep.
today.
You want me to start from how I got into Bitcoin and all the way up into this?
Yep, let's
Yeah,
do
it's been a long road for me. I found out about Bitcoin in college when I was at Indiana University in the Kelley School of Business. I was studying economics, and I found out about Bitcoin on an internet forum where people were using it to basically trade files and software and everything else. And it seemed like a really cool thing, but didn't make too much sense to me. I did have a friend of mine though who was mining Bitcoin on his just his gaming PC back in the day. This 2010, back when price was, way below $1, and he was just using it for beer money. And so he wanted to sell like $100 worth of Bitcoin for beer money, looking for a buyer. And my friend and I almost bought, some Bitcoin about 70 cents. And instead, we were like, no, I think we're getting screwed here because this guy's going to go buy beer, and obviously we would also like to have some beer. So we went instead and bought beer, watched the price go up to $1,000, the next year, kicking ourselves for not, making the investment and having the opportunities to become millionaires while in college in 1 year on a $100 investment. So I watched Bitcoin like a hawk ever since then. When it pulled back, I actually tried buying my first Bitcoin miners from Butterfly Labs back in 2013. I sent them $5,000 for these small little, I think they were 10 mega hash units at the time, maybe 10 gigahash. It's so long ago, I can't remember. And they never sent me my miners. So got screwed there. Went to a Bitcoin ATM the following year, bought my first Bitcoins. And then in 2015, Ethereum had just came out. And I kind of thought I had missed the boat on Bitcoin. And, here comes this new revolutionary cryptocurrency. And I said, I'm going to not miss the boat a second time. Quit my job, started mining Ethereum full time. And I went into mainland China and set up a Ethereum mining company, mostly doing hosting for other people who were trying to get into Ether at the time. And I was just able to really grow and scale that business. That worked out really well for about 2 years. And then in 2017, during the bull run, I just had to deal with a lot of problems that nobody should ever have to deal with as a white guy trying to operate a business in China, primarily driven by cryptocurrency going through the roof. So I had to get out of there. I had to sell off that whole thing. I pivoted. I became a hardware manufacturer. We designed a immersion cooling technology system that we were selling to flare gas companies primarily in Alberta. And then in 2019, I got picked up by the former CEO of Bitfarms, who just kept speaking at the same conferences as me, and really, we just connected, and we saw a business opportunity there for me to take what I was doing with the company I had founded and bring it to a larger scale with Bitfarms. So I joined the company 1 month before COVID launched, and kind of thrown into the fire at a very, very interesting time in Bitcoin, as it's pulling down to $3,800 and its lows, and things are just going crazy everywhere. But, we're a company that's made it through multiple bear markets and corrections, and we made it through that $3,800 pullback, and we're making it through this $19,000, $20,000 Bitcoin price right now, and yeah, it's just onwards and upwards from here.
Yeah, for sure. But I think the interesting part is, even though you found Bitcoin and you saw the price ripping, it seems like you've always kind of had an affinity for mining, whether it was, originally when your buddy was doing it off of a laptop in college, or, starting your own company doing Ethereum mining. So what was it about, this mining technology that kind of initially drew you to it? did you always kind of have like some sort of like tech inclination with that? And yeah, I guess just kind of go into that.
Yeah, I think it's always made intuitive sense to me. I really like energy, and I really like the economics behind energy and Bitcoin mining. And so, as someone who doesn't view themselves as a trader or a short-term player, uh, trying to invest in Bitcoin is a stressful thing if you're not DCAing. If you're trying to pick, hey, this is the optimal time to come in, and this is the optimal time to sell out, or it's it'll consume your entire life. And the vast majority of people, I think, who are into Bitcoin just don't have that skill set, don't have the temperament, and really don't have the discipline that it probably takes in order to be a successful short-term trader. And so when it comes to Bitcoin mining, I view it as one of the best ways to gain exposure to Bitcoin, because this is a process that you build, you operate, and as long as you can literally prove that you've done the work in building out the Bitcoin mine, you can get a cost advantage over buying it at market, and you can be generating that Bitcoin income every single day. That's something that has always kind of made intuitive sense to me, and just seemed like the smart way, the prudent way to kind of de-risk accumulating Bitcoin.
Yeah, and that makes complete sense. And yeah, that's awesome that you've had an affinity for that. And I guess it's made you very successful, where you're at today. But I think it's a very interesting time in Bitcoin mining right now, because it seems like the overall hash rate just keeps kind of climbing. But the price is kind of, like you alluded to a little bit earlier, has been floating around the 20K mark, or, maybe a little above, maybe a little below. But, what impact do you see of the hash rate kind of keep climbing, and the Bitcoin price kind of being stable more or less on the mining industry?
This is a really weird period in Bitcoin right now. It's been a period of extreme stability over the last several months. Like, after we pulled back to 20K, Bitcoin has actually lost a lot of its volatility. Well, the world continues to kind of spiral out of control, and seemingly, markets are reacting in very rash and somewhat unpredictable ways on a daily basis. Bitcoin has really held these levels quite strongly. And I think miners view that as a bullish signal. Really, I think people get confused what mining is. They think that when we're mining Bitcoin, we're analogous to gold miners who are just digging through dirt, or that terrible paragraph that everybody writes about solving complex, useless math problems over and over again to generate Bitcoin. And really, what we're doing is we're securing the network, and we're validating transactions. And it's just about as important, if not more important, about preventing invalid transactions and preventing invalid changes to the code as it is processing valid transactions. And really, mining is just an incentive to provide that security. You look at how security grows all over the world. Cybersecurity is one of the best growing industries year after year. There's a significant value to cybersecurity. There's a significant value associated with protecting wealth and storing value. And Bitcoin mining is just probably the truest and purest form of that. So, I think that you should continue to expect hash rate to improve over time. And generally, I view that there's some natural pricing economics that come in right around the levels that we're at. I anticipate somewhere around 6.5, 7 cents is kind of the floor for revenue per terahash for a lot of miners. Certainly not the majority of miners, but enough miners for it to impact the hash rate, to pull back on difficulty, and to see that market share and profitability to those miners who have positioned themselves on the lower end of the cost curve. And so that's what is really important as a miner. You have no control over your revenue, right? It's one of the few businesses in the world that we have zero control over our revenue. We're going to generate the amount of Bitcoin that difficulty dictates, and that Bitcoin is going to be worth the price that the market dictates. But on the cost side, you can control everything. And if you position yourself in that low end of that cost curve, the bottom 25 to 33% of low cost producers, you're good in almost any situation. Right? The rate that the market would have to pull back in order for you to become unprofitable and have to turn off is beyond any reasonable assumptions of what could happen on price. And so, that's really the key here is miners have a strong focus on cost. And while there's a lot of people who have signed, 7 cents and 8 cents hosting agreements, which are break even at best right now. There's a lot of miners who have also, started tapping into lower cost sources of power. There's miners like Bitfarms who have hydroelectricity, which is very, very immune to increases in the underlying price, because there's no fossil fuel chain. There's no real cost components in hydroelectric that's really subject to inflation, other than labor and some basic repair parts. So if you're positioned on that low end of the cost curve, you're still looking to grow right now. The cost of the hardware is the cheapest it's been in 2 years. And even though the profitability is not really there, if you are anticipating that Bitcoin price is going to rebound sometime next year, it does make sense to do some very strategic growth. You shouldn't be growing at any cost, but strategic growth makes a lot of sense. So I think marginal increases in the hash rate from here on out through the end of the year. I don't see any more 10% increases in hash rate without a massive increase in Bitcoin price. I don't think the market can sustain it. I think we're looking at 1% to 2% adjustments here and there, and probably positive and negative adjustments going back and forth if we stayed, around these levels of USD per revenue on terahash basis.
Yeah, so you kind of alluded to, the cheaper prices of Bitcoin miners, but it seems like, that might be kind of an after effect because of, the big dip in the bear market. We've seen a lot of miners struggle that weren't really, I guess, positioned very well for this bear market. And I know you probably can't speak to other companies or anything else, but we've seen, companies like Mawson and Argo sell off some of their equipment. So, how did, Bitfarms kind of prepare for something like this with, obviously Bitcoin is extremely volatile, and, exactly like you said, you can't really predict the, your profit day to day. You can anticipate how much Bitcoin you can mine and everything like that, but you can't really predict, the price is very difficult. So how did you feel that, Bitfarms has kind of prepared themselves, and have you guys prepared yourself for, a potential, I guess, longer term bear market with a lot of, the current geopolitical uncertainty?
Yeah, and the way that we always view that, goes back to what I was just saying there about position ourselves as a low cost producer. And so we've had this very, very strong principle on cost control of our operations. I think we're pretty well recognized as one of the better operators out there, at least amongst the public, well-known miners. We're one of the better operators. We consistently put out good numbers, good production reports, solid figures there. And we've had a very strong discipline there, saying we're not going to sign contracts which are going to expose us to huge increases in our underlying power cost. That's what's been one of the driving factors behind us in our international expansions, as well as in our development of hydroelectricity resources. And so, as a lot of our competitors have seen, not only a fall in Bitcoin price, an increase in difficulty, but they've also seen underlying energy prices, double. For us, we've kept our energy costs flat. So we haven't had that same exposure on the cost side, because we had the forethought to say, hey, we're only going to pursue these growth objectives that, are going to be well positioned in a bear market. And so that's how we think about our operations and our mining strategy and our energy procurement. And that's one of the best ways, I think, as a miner, that you can protect yourself against the downside, because the market hasn't evolved yet to have so many derivative products where you can lock in the value of your hash rate. Luxor has recently just announced a derivative products. A number of other groups are working on them, but it's a really nascent market. There's not a lot of liquidity attached with it. And the only other way that you can really lock in the value of your hash rate other than that is through, cloud hosting or something along those lines. But, you just position yourself on that low end of the cost curve, and you are going to be well positioned irregardless of what happens to the price, because those people who get ahead of themselves and who value growth over cost, they'll be the first ones to go.
Yeah, exactly. And it seems like, whether we like to admit it or not, as Bitcoiners, there's still kind of like the correlation with the overall market. Whether it's the S&P 500 or some of these other, stock market indexes. And so I know I'm kind of hammering this price, worry here, but is there any, potential worry that even with like the next halving coming up, where that difficulty kind of, shoots up in the next couple of years? Seems like there is, a decent amount of uncertainty. So like for the overall, I guess, not only just like industrial miners, but do you think that there might be somewhat of a worry that, maybe home mining might be less accessible, just simply because, energy costs and everything else are seemingly kind of going up with all this, geopolitical risk, energy crisis in Europe, and all these other outside factors?
Yeah, for most places right now, I'd say home mining is probably not very profitable. Um, Retail electricity prices have gone up pretty much across the globe. There are very few markets that haven't had much exposure to that. And with the pullback in Bitcoin price and the increase in difficulty, there's not much margin there. The good thing for home miners is that the hardware's never been cheaper in the last 2 years. And so if you are looking to get into this is, a reasonable time where the barriers to entry have been reduced dramatically. But in exchange for those reduced barriers on the capital side, you have a much lower return. And so there is that risk reward balance that plays out here in the market for home miners. Generally speaking, uh, I personally just wouldn't recommend most home miners to be a home miner unless they just are really interested in doing it. For the vast majority of people, if they're looking at it as an investment strategy, this is something that, is a lot more overhead than you probably think. If you want to just plug in one miner and use it kind of as a space heater or heat your garage, that's one thing. But you'll end up doing a lot of work learning about it, troubleshooting it, making sure that it's always working, doing the repairs and everything else. Relative to your income, it's not worth it to most people. But if you love it, if you find it interesting to learn about this stuff, then it's never been cheaper to get started. So there's goods and bads with every market condition. And I'd say most people they're just better off doing dollar cost average and not having to worry about the risk on the underlying hardware and making sure that they have things optimized and making sure their power costs aren't going up and everything else. And if you do want that exposure, that's what the public miners are trying to fill that void for. How do you get access to industrial scale Bitcoin mining economics? And it's through the public mining companies. The problem there is that the valuations of public mining companies are all over the board. And it's almost impossible for, I think, a retail investor to take a look at this space, even an institutional investor, take a look at the space and say, wait a minute, why is this company valued at X? And why is this company valued at 3X? And why is this company valued at 1/4 X? Right? It doesn't seem to make sense to a lot of people. So I think that just shows how immature this market is, how new we still are. There still needs to be a lot of education that happens around our space. But these markets are evolving. A couple of years ago, it would be crazy to think that we had something around 30 publicly traded Bitcoin miners across all these different stock exchanges across the world. And if it wasn't for the pullback in Bitcoin prices, we'd probably be at 50. At the end of this bear market or correction, who knows how many will actually be running. It could be 20 of us, it could be 15 of us. But there are definitely companies who are focused on growth over cost, and I think those are the companies that will be the first ones to go. And the companies like Bitfarms, who have a strong focus on cost over growth, I think are going to be the long-lasting winners here.
Yeah, so you alluded to it a little bit that the market is kind of immature when it comes to evaluating Bitcoin miners and Bitcoin mining stock price and things like that. So what do you think, I guess, is that big educational gap between, retail and institutional investors when it comes to evaluating some of these miners? Is it, maybe just not understanding the full ins and outs of mining, not understanding Bitcoin? What do you think, I guess, is that knowledge gap there?
I think there's a lot of knowledge gaps. First, I think there's a big knowledge gap just on Bitcoin itself. And then I think there's an even bigger knowledge gap on Bitcoin mining. And the market seems to have really focused around one figure because it was too complex of a subject, but they all wanted exposure to it. There was enough of an understanding to understand, hey, Bitcoin is this really interesting, potentially highly profitable asset that we can get exposure to, and Bitcoin mining is somehow a derivative of that. But they didn't really understand more than that. And so they latched on to one thing, and it was kind of end of 2022 year-end hash rate figures, right? And at the beginning of 2021, when people are looking for these exposures, they're saying, okay, well, who's going to be the biggest, right? At the end of this bear run, who's going to be the biggest one? And that's all they focused on. They didn't focus on what it was going to cost to get there. They didn't focus on whether or not the companies had a record of actually building and operating these facilities. They didn't take into account how they were going to pay for it through their financing strategies. They didn't take into account their energy efficiencies or anything else. And these things all matter. And the reality is that, at the beginning of 2021, it's really easy to sign a purchase agreement for a large amount of Bitcoin miners. But as you go into 2022 and those miners are being deployed, it's a much greater challenge to actually deploy, make operational, and have very profitable and consistent operations. And so the market is starting to separate itself. I think there's a lot of players out there who, promise big numbers and they fail to deliver. And the market's starting to realize that these miners are not just about what they say they could be in the future. Really we need to be focusing more on what these miners say and how they actually perform over time, just like you would with any other company, right? You wouldn't look at another company and say, okay, well, this company started out from, 2 months ago, they raised $1 million, and now they're going to be the largest drinks manufacturer in the world by the end of next year. So let's put all your money into it, right? And it's like, no, let's have some more reasonable expectations of what this company is going to be able to achieve. I think that is being shaken out right now. I think, when markets are going up, it's really easy to just throw money at an industry and try and get that exposure. But it's these pullbacks that make people reevaluate their investment strategies and positions and really shakes out the winners and the losers. And the winners are going to be really well positioned going into the next bull run.
Yeah, and you kind of, you spoke on energy costs and, the efficiency of, being able to mine Bitcoin. But there's been a lot of discussion in the past couple of years about, how that energy is obtained. And I know you've written a couple pieces about, the whole ESG narrative and everything like that. Do you think that FUD is kind of starting to pull back a little bit as, more miners are kind of getting into capturing that flare gas and capturing some of this excess energy? Or are you still seeing kind of some of these hurdles of, maybe people not fully understanding the, energy and everything that's around it and kind of going at that ESG narrative?
Yeah, I mean, in the same way that I think there's a big knowledge gap on Bitcoin and Bitcoin mining, I think there's a really big knowledge gap on energy and electricity. I'd say 9 out of 10 people cannot tell you the difference between energy and electricity. And they don't understand how electricity is generated, distributed, and transmitted across the world. And so, you get used to just flipping on and off a light switch and its power, and you get really accustomed to that without really thinking about all the different things that have to come into play, from bringing that energy resource, converting it into electricity, upgrading, or distributing it throughout an entire network and bringing it to your house so that you can turn on a light bulb on demand. A lot of things need to go into play there. And the reality is that for the last, probably the majority of the time that Bitcoin mining has been around, Bitcoin miners have not wanted any public attention. They've wanted to stay under the radar. They wanted to not be noticed. And so the people who, wanted to put out a narrative there and wanted to put out an idea about what Bitcoin mining is or wasn't, they had free reign. Because none of the Bitcoin miners were actually standing up and telling their story. And I think with the kind of institutionalization of Bitcoin mining through a lot of these public mining companies, we realized that there's an advantage to being out there in public, and there's an advantage to telling your story. And we're not going to be hiding under the table anymore. We're out there, we're engaging. We're speaking with journalists, we're speaking with academics, we're speaking with policymakers and their staff, and we're speaking with regulators. And we're focusing a lot on the educational efforts here because the reality is that the vast majority of information that's been printed on Bitcoin mining, especially on the environmental impact of it, it's just flat out wrong. Some of it is just flat out fraudulent, and nobody has really done any effort to combat that, other some Bitcoin mining personalities and some Bitcoin miners. Now that we kind of have this more public face, and we realize the value of what we're doing, and we realize the value of our story, I think we've got a really good case to show here. I think we're going to be successful in the long run in communicating that to the public and communicating that to investors and regulators and policymakers and everybody else. But it takes time, to overcome years of misinformation and warping people's views on the subject. The reality is that, and I've been saying this for 4 years, that Bitcoin mining is the only natural economic incentive to reduce your emission and reduce electricity waste in the world, bar none. Without a government subsidy, there is no incentive to do these things other than Bitcoin mining. And so if you want to ban Bitcoin mining in order to reduce emissions, you're removing one of the most powerful tools that we have in our tool chest to reduce emission, that natural economic incentive that empowers individuals and corporations, to monetize that waste and reduce it.
Yeah, and I agree with you 100%, and that's very well said. But on the flip side, one thing that does kind of worry me is that you alluded to earlier about how many Bitcoin miners are kind of going public, and I know that I've heard a couple. I'm not going to name the names or name the companies or anything like that. Get onto stages and kind of say, well, we are a public company, so we have to, go by these laws and kind of go by some of these regulations. And so essentially, it seems like they're almost kind of bending the knee to some of these ESG policies and kind of just, taking it for what it is. Do you think that there's going to be, I guess, a little bit more of that, or are Bitcoin mining companies kind of coming together and saying like, hey, we can get multiple, whether it's C-suite execs from various companies all in the same room talking with these policymakers? Is there more like a collaborative effort to kind of help, shrink that knowledge gap?
Yeah, everybody across this industry, is starting to stand up and speak out, because there's a lot of good stories here, and it needs to be communicated to the public. The ESG thing is something that seems like it was forced upon the industry. It's not something that this industry asked for. It's something that was pushed onto people through the news. But it's not something that's necessarily not aligned with our interest, right? Being good for the environment, and being good by reducing electrical waste, and being good by monetizing, these kind of recyclable inputs, like that only reduces our cost and increases our profitability, right? So as you look for the future and what's going to happen with Bitcoin mining, we're the only industry in the world that has a halving event, a natural incentive that kicks in every 4 years, which is going to cut that, underlying block reward in half. So you have to think, on that cost side, because, we can't control the revenue, but we do know every 4 years that Bitcoin revenue is going to go down in half. And so how do you position yourself in the long term? Eventually you're going to be having to be using sources of energy that really have no other demand. And it's only by using those sources of energy that have no other demand, and therefore no other value, that Bitcoin mining is going to be sustainably profitable, in any situation, right? And I think that's a natural economic incentive that is driving Bitcoin miners. So you see that playing out. It's like companies like Bitfarms are doing that. Companies like Riot are doing that with the energy curtailment and the trading. You have CleanSpark who's doing it with flare gas, and Crusoe doing it with flare gas. There's got companies that are doing it now with the methane emissions capture on landfills and converting it into Bitcoin mining. Like these kind of edge scenarios is where Bitcoin mining is the most applicable, right? if there's a natural, a normal distribution curve for energy costs and energy profitability, really Bitcoin mining sits there on those two tail ends, right? It doesn't make sense for 75% of the power that's generated across the planet. It's not going to be profitable. But on these weird end fringe scenarios where Bitcoin mining is helping to solve market inefficiencies, this is where Bitcoin mining becomes really, really cool and really, really sustainably profitable. And we've got that natural incentive through the halving to pursue those low cost sources of electricity, which are going to be renewable and which are going to be otherwise wasted, in order to be profit maximizing.
Yeah, and there's definitely been a lot of that, and it seems like Bitcoin miners obviously are getting smarter and kind of I guess selling that and utilizing that energy that's just kind of there. But there's also certain points in time. I know Riot and some others that have farms in Texas. It was very it was a big story that during this past summer, it was with extreme heat, they had to turn off their miners in order to anticipate all the AC usage and everything like that. Do you kind of see that as, maybe a potential trend of like, whether you're up in Canada where you guys are located or, some of these farms in some of the warmer climates, just kind of adjusting how much power they're utilizing during certain seasons to kind of help anticipate with, extra power use?
Oh, absolutely. You know, Bitcoin is a really, really disruptive technology for electricity. It's probably the most disruptive technology that's happened to the energy industry since electricity was invented. What people don't understand with electricity, it's one of those, probably the only industry where the optimal point is where supply exceeds demand. In any other industry, you want that supply to be just equally in the demand to be profit maximizing. But if you do that in the electricity space, you are going to have roving blackouts. You always have to have excess supply relative to the demand. And there's been an amount of energy or amount of electricity that's generated and put on the lines that can never be consumed because you have to have that extra buffer there. And it's a problem that the electricity industry never really thought was solvable. You also then have to take into consideration that on-demand aspect that I was talking about earlier with just like turning on or off the light switch whenever you want to. The power companies have to have that buffer in anticipation of not just you turning on or off that light switch, but millions of people turning on and off their light switches, simultaneously in random patterns and orders and times, right, to different effect. That gap, that distance between the supply and demand has always just been seen as a waste. And Bitcoin mining, I think, is going to come in there and help to monetize that gap and monetize that load balancing aspect of things. And by doing so, this is what I'm talking about with, the normal distribution curve too, is right. This is a fringe application within electricity that starts making a lot of sense, right? For the 98% of that load that might be generated on that grid, might not make any sense at all. You could have a generation cost where it's 20 cents and you're selling it to the public at 30 cents, but it still might make sense to have some Bitcoin mining on that grid and on that load to handle these kind of weird fringe cases at the end and be that buyer of last resort that has never existed. And there's no other industry on the planet that can be a buyer of last resort for electricity. It just doesn't work with any other manufacturing or any other business model.
Yeah, and that's very well said and very well put. And so let's get to some of the farms that you guys have. I know you guys are primarily based in Canada, but you have farms kind of all over the place. And I want to talk about your, I guess, Bitfarms experience in using hydroelectric because I think that's very interesting. And a lot of these places are just kind of looking for more, I guess, at least in the United States, more of this just straight off the grid. Electricity that they're using. So how has the experience been, using hydroelectric power and, what were some, I guess, potential, roadblocks that you guys faced in the initial kind of obtaining that power?
Yeah. The province of Quebec, where we were founded and where the majority of our operations in Hashrate is just loaded with hydropower. And these are, big hydroelectric dams that were constructed throughout the 20th century in order to power heavy industry. Things like iron ore mining, aluminum smelting, timber mills, and paper mills, and this kind of heavy industry, which has honestly mostly disappeared. There is still a lot of aluminum smelting and iron ore mining, but a lot of the other heavy industry players have left, been outsourced to third world countries, have a new production plant which has new technology and it's more cost effective in another location. And the reality is that when that industrial demand leaves, no other new industrial demand came in. And so you have a big gap between the infrastructure that was built to power all this heavy industry and the heavy industry load demands that exist today. And so in Quebec, we have 7 different facilities. 6 of those 7 are facilities that we've renovated from a former industrial site. This was a site that used to be a Quebec manufacturer of something. Notably, one was a hockey stick factory, which, there's, besides maple syrup and maybe crude oil, there could be no other more iconic, Canadian product than a hockey stick, but that got outsourced to China. And so all this infrastructure that was built to power all this industry that's left is now sitting there underutilized, and that's a really cost-effective source of growth. So we've tapped into that in these really kind of small areas. It allows us to move into different townships and take advantage of the old infrastructure that was already built, paid for, amateurized over decades, right? And just allow us to bring it back to life and remonetize it. And the reality is, especially in places like Quebec, they have such a huge surplus of generation relative to distribution, transmission, and even market demand that we're really only utilizing excess hydroelectric production. Even beyond what is sitting there on the lines, Hydro-Quebec has put out in their reports that they spill out about 40 terawatt hours of energy every year. And by spilling, that just means they have all the infrastructure there in terms of running the water through the dam to generate electricity, but they don't have an ability to sell that power to a market, right? And so instead of generating that electricity using the water that's behind the dam, they actually spill it over the dam in order to just avoid generating too much electricity relative to what the market needs. And so if you translate 40 terawatt hours, that comes out to 4.5 gigawatts of power on a consistent basis. And then you look at what the entire industry for Bitcoin mining consumes, and everybody's like, oh, it consumes as much as Argentina or whatever. It's like, well, it's about 10 gigawatts. And so just look at the power that just one province in Quebec alone is wasting. They're wasting 45% of the power that it would take to run the entire Bitcoin network, all on hydroelectricity, all in infrastructure that's built out, paid for, and just sitting there, not being properly utilized. And so there's tremendous opportunities in situations and markets where they have this kind of gap. And that's the same thing that we found in Washington State. It's the same thing that we found in Paraguay as well, which has led us to expand into those 2 other regions. That excess hydroelectric capacity is very important to us for a lot of strategic reasons. Sure, there's the green aspect of how clean it is, but there's also the long-term sustainable economics behind it. And if you're sitting there and hydroelectricity is not a resource that's easily transmitted. The water's going to flow. You can't barrel up water and bring it somewhere else and open it up and put it into another plant. It goes on the lines or it doesn't. So Bitcoin mining, if you're going to those hydroelectric resources, you are tapping into a market where the relative supply to demand is just so huge, it really shields you on higher prices rolling forward.
Now, I see that you mentioned all of your plants except for Argentina, and I kind of want to get into that plant because it seems like that you guys are using a little bit of a different energy source. And what was the, I guess, reasoning for going to Argentina? Was it more so because some of the co-founders have roots down there? And what benefits have you found from expanding, I guess, outside of North America and moving more towards South America?
Yeah, well, I didn't mention Argentina because it's our only site that isn't powered by hydro, and the question was about hydro. But Argentina also fits into our strategy here of reducing our average cost of power and having a strong control on our costs. And so the situation in Argentina is we're behind the meter at a power plant. This is a power peaker plant, which the vast majority of the year there's just no demand for its production, and so it's sitting there on the line, being utilized maybe a few hundred hours a year. Relative to all the hours in a year, we're talking about a couple percentage points, and that enables us to, in a similar way to having this underutilized hydroelectric infrastructure resource, now we have an underutilized natural gas electric resource that we can tap into for those same lower cost economics. And so, we have such a strong discipline there with controlling our costs. And we're willing to go to different markets. I think it's part of Bitcoin's ethos to be decentralized, and there's more than one way of being decentralized. And there's from our company, we have decentralization even within our regions that we operate in. We don't have too many, eggs in one basket. We don't have one facility that everything goes into. Even in Quebec, we have 7 different facilities. In one town, we may have 3 different sites, right? So we have physical diversification in smaller areas, and we've got the wider diversification across international markets. And that gives us some risk reduction in terms of policy, environmental effects, economic impacts, and everything else. So if something bad happens in that one area, not all of our sites are affected, and we still have profitable sources of revenue. And then the other way that we offer decentralization is really through our public shares, which is a new way to think about decentralization. But it's very easy for somebody to plug in a miner, but it's also very easy for somebody to buy shares. And if you're buying shares of a company that has a certain amount of exahash, there's a ratio that you can do there on a share per exahash basis. And so similar to or a share per terahash basis. So similar to buying 100 terahash worth of Bitcoin mining as a physical miner, you can buy 100 terahash worth of Bitcoin mining through a public miner, and you can kind of have that diversification of the ownership of that hash rate through our public shares. So we think about it in a couple of different ways. The geographic aspect is definitely one of them. We want to be exposed to multiple different environments, which is going to give us greater access to new energy opportunities and shield us from disruptive political, environmental, or economic events.
Yeah, and that's definitely interesting and a good point, and I think it all kind of revolves around the Bitcoin ethos, which I absolutely love as well. So, but I did notice that there's more of a deployment of older ASICs to these South American facilities. Is there, I guess, maybe a worry of maybe some more potential geopolitical risk as it's your first site down there, or is there another reasoning because you guys are getting such cheap energy down there, and specifically your Argentina facility?
So our Argentina facility is actually all brand new M30Ss. So it's some of the best equipment we have. In the Paraguay site, though, we did deploy some of the older equipment, and the reasoning for that was pretty simple, really. We had a couple thousand Bitcoin miners in a Silicon T3s that were still good performers, still operate well, generate good profit and cash flow, but they weren't really worth much on the secondhand market. And so when we looked at the Paraguay opportunity, we said, hey, here's our chance to expand into a new market that we've never been in before. How do we want to do that? And one of the ways that we wanted to do that was just in the lowest capital cost possible. And so by taking miners that we've been running in Quebec for almost 3 years, they've paid themselves off numerous times over and don't have a further capital cost associated with them, and we can't get a very good price for them on the retail market. How about we send them down to a lower cost jurisdiction, right? Reduce the overall cost of setting up in a new country and extend the useful lifespan of these machines and these cash flows. And so we were able to expand in Paraguay using those used miners for a fraction of the cost for expanding in Paraguay with brand new miners. And that gave us access to a completely new market for power down there at a fraction of the price to start.
Gotcha, and that makes a lot of sense. And then one last question on Bitfarms, and then we'll get into, I guess, maybe a little bit of the reasoning why to invest into, miners instead of maybe the underlying asset. But I did see that you guys recently paid off some debt. So why pay off the debt now, kind of in this like prolonged bear market? And what was the debt secured by anything? And I guess the optimal capital structure that you guys have for the long run?
Yeah, so we have a strong focus, like I said, on cost, and we also have a strong focus on balance sheet improvement, and that's part of a way that you help to de-risk the company and make sure that we're strengthened and ready and able, and to not only survive but to thrive as this bear market ends and the bull market begins to rally. And so we have a wide variety of financings that we do. We've done a number of miner financings where it's just a miner equipment loan. The only collateral is a miner. There's no real corporate guarantees or anything associated with that. That's been a big chunk of our capital. We also have we had a Bitcoin backed loan, which we still have with Galaxy, and that was a decent amount of our capital. And then we also have like the ATM program and the private placements that we've done on the equity side. And so we're trying to balance, debt, dilution, and everything else by tapping into these various different financing vehicles to help us raise cost-effective capital, for the company. And looking at the ones in our press release that we just had a couple of weeks ago, the debt that we paid off, that was some minor financing. It was our first minor financings actually that we did back in 2020. And so, as an example of how productive those facilities were, we signed agreements for, I believe it was M31Ss and M31S pluses, a total of 4 agreements for 7,000 of these miners. The prices was in the teens per terahash. I think we were paying back then, it was somewhere around $14 to $16 a terahash for this equipment, and it came financed at 105% loan to value, right? So not only did the companies pay for the entire cost of the miners, but they also paid for our upfront duties, which were tax recoverable, so that we had zero capital outlay at the beginning to grow that hash rate, right? And so, you look at how do you grow your hash rate with your capital on hand? Those minor financings were a great source of that, and they paid off handsomely. As soon as the market started going up, the underlying value of that collateral was worth a lot more than we paid for it. The profitability of those miners increased, so we were making way more in terms of the daily mining revenue, even when you add the P&I payments on top of the cost to operate the equipment. And so those ones were just 2-year agreements, and they just came to a close. And so it's just an example of all the different strategies that we've taken at Bitfarms in order to grow our company in ways that are trying to be cost effective with a strong focus on return on investment. And we've got another couple of those minor financing agreements which are scheduled to be paid off shortly. I think there's one either this month or next month, and then there's one in January. And we spread these out, so we're going to continue to reduce the debt on our balance sheet just through the natural payback of these schedules that we started 2 years ago effectively. And beyond that, that's just going to help us be better positioned going into next year. Less debt on the balance sheet, less payments to be made. That's just more cash for the company.
Yeah, it sounds like you guys are positioning everything well, and it seems like you're doing everything that you need to be doing to continue to grow Bitfarms. And yeah, I mean, this conversation has been amazing, and I've definitely learned a lot on how you guys look at everything. But I feel like every time Bitcoin mining companies come up and the stock comes up, there's always that one question as to why invest in a Bitcoin mining company and purchase the stock opposed to the underlying asset. I've heard you kind of go on this a few other times, but I'd love to hear it again as to why you think investing in some of these companies is a good outlook.
Yeah, I mean, there's a very specific function that we fill as public mining companies, and we provide exposure to Bitcoin through the public equity space. So if you are, an investor that doesn't have comfortability with managing your own private keys and your own hardware wallets, and maybe you don't even have the internal corporate approvals to invest in the underlying asset. That leaves you to look for other derivatives of it. And it's very tricky, even in the United States right now, to have a true proxy to Bitcoin on NASDAQ, right, or any of the other public markets. In Canada, they had a little bit more success. We have actual Bitcoin ETFs in Canada. But in the United States, the closest thing still is Grayscale Trust. And it's not a true ETF. There's liquidity and redemption issues and everything else which separate it from being an ETF. And so Bitcoin miners are a way to still have that exposure, but be compliant with the current regulations that exist and are preventing other true proxies. And so you can get exposure to Bitcoin through your traditional, tools, through your traditional platforms and portfolios without having to go seek, different specified corporate approvals to set up exchanges and private keys and have the audit approval and all of that stuff. You can get exposure directly through the Bitcoin miners themselves. And the miners all generally function as leverage plays to Bitcoin. And so, as the market was really ramping up last year, I believe every public miner outperformed the underlying Bitcoin price, right? So if you're a believer in the Bitcoin price going up, the public miners are a great way to have exposure to it, because you don't have the concerns that a lot of companies may have when it comes to investing in the underlying asset, just because they don't understand the technology, they don't have the procedures in place. But for a leverage play, leverage works in both ways. And the reality is that this year, in the same way that every Bitcoin miner outperformed Bitcoin, this year as Bitcoin has pulled back, every Bitcoin miner has outperformed Bitcoin to the downside, right? And so every Bitcoin miner is down more than Bitcoin is down. And that is just the function of that leveraged exposure. So, we provide that opportunity for investors if they think Bitcoin mining is a good time. If it's a good time to invest in Bitcoin, investing in the Bitcoin miners is a great way to get that exposure. And, as with everything, hopefully you are buying low and selling high. The miners right now are pulled back in some cases well over 90%. And so if you weren't comfortable with the valuations last year, you might start looking at the valuations now when you're paying, 10 cents on the dollar or 8 cents on the dollar to their peaks from last year. Because if Bitcoin price is turning around, this is a relative discount that you can get buying Bitcoin right now that's going to outperform Bitcoin on the way up. So you can buy more of it now, and it's going to have a higher relative return when markets improve. And so that's the function that we serve here in terms of investors and markets. But there's risks and that everybody needs to take into consideration. And there's just a lot of unknowns here from most investors in terms of trying to understand which Bitcoin miner they want to back. And I think that is a hurdle that I think most investors still are struggling with is just how do you choose the right one to go about? And I'd say, look at operational records. I'd say look at what they're saying, look at what they're doing, look at what they're actually producing today, and value them on how the company performs month over month instead of what they might be able to do in 2 years' time.
Gotcha. So Ben, thank you so much for your time. I really appreciate it. Why don't you tell everybody where they can find you and what all you got going on?
Yeah, only one place that you can find me is on Twitter at #hashoverride. And you can also follow Bitfarms at Bitfarms_IO on Twitter as well. You can go to our website, bitfarms.com. And I think we also have now an Instagram and a Facebook, but I don't use those channels, so I'm not entirely sure. Just go to our website and our Twitter.
There we go. Yeah, follow him on Twitter. Thanks so much, Ben. Have a good one.
Yeah, thank you, Brandon. Great having you.